This cycle is different, and if you don't recognize how, you're already falling behind. There's a pattern in this cycle's altcoin rallies that flips the usual narratives on their head. Zoom out and it's clear. Each cycle is becoming sharper, faster, and far more ruthless. The days of easy altcoin gains are fading. In 2017, alt season lasted nearly a year. In 2021, it barely made it 6 months. Now many altcoins are still stuck near bear market lows even as Bitcoin breaks through key levels. This isn't your usual cycle breakdown. In this video, I'll show you why the 2025 cycle could be the most pivotal in crypto's history, and why most investors are chasing the wrong signals. These are 3 under-the-radar truths you won't hear from influencers or CT threads. They could be the difference between surviving this cycle or getting wiped out by it. If that sounds good, hit the like button to support the channel. It helps more than you think. And if you haven't already, subscribe for regular, high-quality content all under 10 minutes. Before we get into it, a quick heads up. If you don't like having your views challenged, or if you only want to feed the bull inside you, this video might not be for you. I'm going to be direct and call things exactly as I see them without sugarcoating. As always, I'll back it up with data and patterns, not hopium. Alright, let's dive in. The first uncomfortable truth is altcoin season is not guaranteed. There won't be a blanket alt season this time like we saw in 2017 or 2021. Some sectors will pump, but most will stay dead weight. And if you're in the wrong ones, you'll miss the whole cycle waiting for your coins to pump. With every cycle, the window for altcoin rallies is shrinking. I've mentioned this before in earlier videos, but people still keep asking the same question over and over. In 2017, alt season lasted nearly a year, followed by a brutal period where most altcoins underperformed Bitcoin for nearly 34 months. That's almost 3 years of consistent bleeding. Then came the 2021 alt season, where we saw around 6 months of face-melting rallies, and Bitcoin dominance dropped into the 40s before reversing. But after that brief window, altcoins started losing ground again, and here we are in the 2025 cycle, with many still stuck near bear market lows despite Bitcoin pushing higher. Bitcoin dominance has been climbing and holding strong. The wider market seems to have forgotten how to rotate, so the takeaways are pretty clear. The alt season window is shrinking, altcoin bear markets are getting longer, and Bitcoin dominance is pulling back less with every passing cycle. The old alt season patterns are breaking down, and this time, it looks like only a few narratives will run while the rest get left behind. We've seen a few periods of altcoin rallies within specific categories, but nothing close to a full-blown alt season where everything takes off. And even in those isolated rallies, most coins give up their gains as soon as the hype fades. There are plenty of examples that show this pattern clearly. Let's go over what we've seen so far this cycle. There were 2 broad altcoin rallies that stand out. The first came in March, driven by halving excitement. The second was during November and December, where the market briefly got excited by the US election narrative. These were the only 2 periods where most categories saw any kind of synchronized momentum. Outside of that, the few altcoin runs we've seen have been entirely narrative-driven and extremely short-lived. AI coins pumped around the Nvidia conference in March. Render was a standout, pulling off a 4x move before retracing nearly all of it in the months that followed. If you didn't take profit during that run, you're probably back at square one or worse. Yes, there was a second chance later, and maybe there will be a third, but most other coins didn't offer that kind of opportunity. Something similar happened with meme coins. There was a mini meme cycle in March and April, starting with the Slurf dev accidentally burning $10 million worth of tokens and peaking with a failed marketing push to get whiff on the Vegas sphere. Most of those tokens have now dropped over 90% from their highs. So what would be the right move to stay ahead this time? The key is adapting your strategy. That means taking profits consistently during pumps and letting go of the outdated mindset of holding blindly for the entire cycle. I personally sold into the election pump by following this exact strategy, and that decision protected my portfolio from major losses. I'll break down that approach along with the actual results in a dedicated video soon, so be sure you're following us to catch it when it drops. The rules of the game have shifted, and if you don't adjust, you will fall behind. This ties directly into the next harsh truth that many still haven't fully accepted. Institutions are now the new retail. There's still a lot of chatter about retail coming in to pump our bags just like they did in earlier cycles. But the truth is that in 2025, there's a strong chance retail won't play a significant role in driving this bull market. What we're seeing instead is institutional capital stepping in as the primary market mover, and their attention is firmly fixed on Bitcoin and ETH, not on our favorite low-cap altcoin. While retail interest might return in small waves, like it did briefly in November, those episodes are likely to be short-lived and highly selective. During that period, we saw older 2017-era coins like XRP surge by over 500% as legacy bagholders briefly jumped back in, pumped their old bags, and left. But this kind of isolated spike is very different from the broad, sustained altcoin rallies driven by retail hype that we saw in 2017 and 2021. Back then, waves of new retail investors flooded into crypto chasing overnight gains, and that mania drove much of the explosive upside across the board. But many of those same investors got burned in 2022. Between the Luna collapse, the FTX implosion, and the broader macro crash, retail took massive losses, and that kind of trauma lingers. Now in 2025, with persistent inflation, rising interest rates, and economic uncertainty still weighing on households, the average investor is far more cautious. Disposable income is lower, confidence is fragile, and enthusiasm for speculative assets is nowhere near what it used to be. This is why institutional investors have taken center stage. With deeper capital reserves, regulatory clarity, and a more structured investment approach, they've filled the gap left behind by retail and are now steering much of the market direction. But their approach is completely different. Rather than chasing random tokens or meme-driven hype, institutions are parking billions into Bitcoin and ETH through regulated channels like ETFs. The explosion of spot ETFs, especially in the US and Europe, has created a clear and compliant pathway for them to enter the crypto space. In 2024 alone, BlackRock's Bitcoin ETF pulled in billions in inflows, and that momentum hasn't slowed down in 2025. These players operate under strict compliance and risk frameworks, so they naturally avoid highly volatile, unregulated altcoins. As a result, capital is getting concentrated in top-tier assets, while most other tokens are left starved for liquidity and market attention. On top of that, the token landscape in 2025 is completely overwhelmed. Easy-to-use token generation tools, combined with AI-driven project creation, have flooded the market with thousands of low-quality coins. The sheer volume of noise makes it nearly impossible for the average investor to filter signal from hype. In previous cycles, retail could identify a few strong narratives or trends and ride the wave. But now the market is so saturated and fragmented that even experienced participants are struggling to keep up. For new or cautious retail investors, it's even more discouraging, and many choose to stay out altogether. In short, the retail-driven mania that powered earlier cycles looks unlikely to return in full force this time. Economic pressures, past trauma, and an oversaturated, noisy token market have pushed them to the sidelines. Meanwhile, institutional capital is flowing in steadily through ETFs and other regulated structures, but it's flowing into Bitcoin and ETH almost exclusively. This is reshaping the entire character of the market. Instead of the broad altcoin rallies of previous cycles, we're now in an environment where most altcoins are stagnant while major assets continue to grind higher, slowly but consistently, under institutional momentum. That brings us to the final truth, which, depending on your perspective, could actually be a positive shift. The post-halving rally is fading, and the old 4-year cycle is breaking down. Historically, halvings triggered major rallies by cutting block rewards and tightening supply. But with over 95% of Bitcoin already mined by 2025, the April 2024 halving had little effect. Daily issuance was already low, so the reduction barely changed market dynamics. Without a real supply shock, the halving failed to kick off the kind of rally we've seen in the past. What we're seeing instead is a shift driven by institutional capital. This isn't retail-style hype and panic. It's structured phased deployment through ETFs and long-term strategies. Institutions aren't chasing pumps, they're building positions. That steadier flow creates firmer price floors and shorter, less violent pullbacks. This new cycle started early. Bitcoin hit 73K before the halving, driven by ETF inflows. In earlier cycles, tops came after the halving, not before. But this time the narrative played out ahead of schedule. And since institutions avoid speculative altcoins, the post-halving rally didn't spill into the broader market like it used to. So what we're left with is a slower, more stable market. Less chaos, fewer blow-off tops, and tighter alt-season windows. Bitcoin and ETH may climb steadily, but without the explosive mania of the past. It's a shift that favors patience over hype, and those who adapt will be the ones who win. So when you zoom out, the takeaway is clear. Alt seasons aren't what they used to be. Retail is no longer the main driver, and the 4-year cycle is breaking down in real time. If you're still operating with the old rulebook, you're already a step behind. The ones who adapt are the ones who win in this cycle. If this gave you a new perspective, consider dropping a like to support the channel. And for unfiltered insights, faster updates, and deeper breakdowns that don't always make it into these videos, make sure you're following us on socials. Thanks for watching, and I'll see you in the next one.